Hey guys, good Sunday morning to everyone. If you're frozen in, see if we can heat it up a little bit around here. So I am recording this so people that are not in weather affected areas that may be attending worship can look at it later. So we're gonna just hunt stocks that have potential for next movements. And I've got a big list just to go through, but I want to mainly use yours that you may have too. One thing I want to reiterate, just from clarification of people asked on in terms of, what is, when you say that there is a fair value gap, the fair value gap is one thing. And that is seen right here. From here down to here is a fair value gap. So there is no construction of that area. It was done very quickly, and so a lot of times they'll come back to the 50 fib minimally to kind of clean up all of the order flow and balance out before continuing on. That's why we look at that 50 fib as such a powerful indicator, because when you're watching zones from top to bottom, that 50 fib can be very, very insightful, even if it gets lost, when it reclaims, it can be insightful. So that's why we look for those, right, is on the macro view. But this would be a good example of a fair value gap. I mean, we've got a gap all the way down into here. That has no, there's no order flow that happened. It was immediate 2 days of pushing up to here, got down into a little bit of that. I don't even know if that's Model T, but if it is or isn't, if it isn't, that shows strength. If it was, then that shows opportunity. But that's a fair value gap zone. Now, what's important about those and what do you look for when you're looking at these fair value gaps is, causation of the base, right? I'm looking for why was that support? And so generally you have to start backing off of that. Well, first you can look at the macro view, and you could say, when I have something that is held a bottom and closed here, I'm going to watch and see if you have follow through, or if I have a reversal. In this instance, it opened here, it fell to a new low, came back up through, and that was a pretty good signal of this bottom holding on this. So that's one aspect that we can look at, is look at the daily first. But in terms of what causation of this, why do these things happen? It's block orders. And so what you're looking for is, how do I identify a block order that's happening? And so this right here would be basically a 12-hour block order that occurred on the market. Okay, so you have 3-4 hour candles all held a range, and that's telling you then, and you can see they all closed back up in. This is a block order that's going on that's creating that. So this was a block order right here. So those block orders, when how would you know this one? Well, once it started moving above the 50 fib, but that's a weak block order. This is a very strong block order here. And then of course you always are going to put your eyes down to the base and look at the volume. So if I have a tremendous volume candle here into this, okay, and then coming out of that block order, which would be right here, if I'm taking a trade, it would be when it broke this right here. Again, we trade compression, okay? We want to risk as little as we can if the market block order fails. That's really all we are ever doing, okay? We're looking for areas of support that create a triangle And then when that triangle breaks, in this instance, you take this down to a 30, and it was a really good opportunity, I'm sure. The last day of this was on 11/19, just to, let's see, 11/19 right here. So right here, this was coming in pretty condensed right here, okay? So when it broke that wedge, that became a very good trade. And of course, it closed somewhere in here. It gapped way up that day. I remember this day when it was just, I think the futures were up like 80 something, huge open. And of course, you just can't buy into an open like that. And it just proceeded to sell all the way back down and eventually all the way down through the crossover trade, then to the downside. But we're hunting block orders. If you're trading, you're trying to find where those block orders exist, so you know where resistance and support are going to come into play. And so, you know, I asked the question Friday, did we retest up into anything? And the answer is we tested back into this Model T of, I believe it was this that you would have been looking for, right, on Model T. And so breaking above and then back down below, big gap down there, obviously. So that's a big gap, not just a fair value gap. So, you know, we're looking for what are the block orders? Well, if I'm looking at a 4 hour, obviously I've got 4, 8, 12, 16 hours of selling going on here at this level. So that is by definition what a block order consists of, is you have a block order of selling sitting here. That's why I asked the question, did we come up here and test into anything? Now, and this is fractured. You could have come up and tested into here, and then you see how it's multiple areas. You don't know where that's going to be. Where it ended up being was not only was it Model T, but you have this base here of what we always are talking about, true resistance. This is all a mirage. This is true resistance. So we have to bust through that in order to have an opportunity for all-time highs. And so block orders over a period of time, just take a 4 hour chart is my favorite, because you're able to see then how it's treating that. Not only is it showing sellers there, but they can become aggressive selling, okay, and really sell that down during those periods. Okay, so we ended Friday with a wedge. Okay, so we ended with the wedge. So if I kept going down into my 30-minute, it gets a very defined wedge. See? Okay, so we have a very defined wedge pattern of lower highs and higher lows. This is not a higher low on this, which I personally look for the body to be down here if it's going to be, because that's not a higher low. That's a lower low than this. And so that's, to me, that's a crack in the dam, as it were, right? You gotta, it doesn't mean anything in of itself, but if you were going to have a lean on the market, then knowing that you had 16 hours straight selling up here at this level, you would be thinking, unless that breaks, that's going to be pretty tough to you know, break through. And so you have this wedge, and this may be an indicator. You need confirmation on it, but it could be the indicator, one of the indicators saying, you know, there's sellers sitting here up at this level. So now you have this 30-minute window here, and all of the bodies, almost, this one's just below it, but most of the bodies are inside of this candle right here. And so the longer time frame that pulls in this to here would get you all of that. I don't know if that's the 2 hour candle or maybe even the 1 hour candle might do that. Let's look at the 2 hour to see if we can get. So we got an inside bar here, okay, low, higher low, okay. So we have an inside bar here, and then we have a double inside bar on the 2 hour that's going on right now. Not an outside bar to this candle. This is an outside bar to that candle. Again, showing the resistance, right? It tried to pop through and then it came back down and held into that candle. And so this is an area of concern for us right now. Is we got to get above this, and then major push could happen. But now you've got what people are saying, a lot of taco trade starting all over again. That wasn't much of an O of the taco trade. But if we're having another one with all of the issues going on, then you're going to see this break down through this pretty quick. So then what? Okay, then what? Well, then that's where our fair value gaps come into play. Okay, that's where we look for gaps and fair value gaps. So we know we have, come on, give it to me. We know we have this area down into here that is already taken out from a fair value gap standpoint. Came back and it kind of opened back down after pushing up to clean this up. So I personally would think the markets would open their futures even below that. I mean, that would be my personal thought, is that your futures are going to open or within the first 30 seconds. If we're going down, you're not going to have much to say into here, which back to Model T, which then we would be thinking to ourselves initially, if we were just in a normal market phase watching, we would say, okay, you're playing above this 50 fib here and you can't break out. Are you now going to come play? And I'm just using layman's terms because, hey, let's just be it's so transparent, right? If you can't break above the 50 and hold and break on further, it's going to come back and at least retest the 50. That would be your best case scenario. That's what it did in the pre-market. I mean, the aftermarket, is it came down to that level. And so there were some buyers sitting there because they're playing that 50 fib, unbeknownst to them, all the issues that were going to be coming. And so now you would think a complete collapse down to this 50 fib is possible. Go play the downside of it. Since you couldn't break the upside, go play the downside. And so that's probably what we're going to see, unless Trump says something, does something. Who knows what he may do? It's very, very unknown. But you have at least until this area here of where I would say the markets would open, right? The futures are going to quickly get to whatever level coalesces with this 685, 684, somewhere in there. So let's see what happens when the futures open. If that's the case, then you would say, so here's your block order right here. That was your block order of buying going on right here. I have then a major fair value gap below here, all the way first into this level that we've got marked, okay, is a very open fair value gap. That would be if the markets are going to go into just a big time sell-off and we topped out, as it were, then this is what would happen. Okay, you have to break down below here, 676.57. And then you have a fair value gap all the way down into this range here. And there was two block orders sitting there. Okay, two block orders at the tops of these, right? Where you would be buying, basically. You would buy here coming out of this block order. Okay, if that's a block order, it should continue now, right? It was, and it continued. So same thing. You're just looking for this reduction back down into here first. Would be a complete failure would be down to here, 676. If that failed into a major correction, then I don't know if that, whatever Model T is between here and there, we should have marked. If we don't, that may be somewhere close to, that may be it right there. I think Manuel gave us that. And that's just above this gap fill. So that is that Model T sitting right there between here and here. And so lose that, and you, well, no, that's what I just marked. We need to figure that out. Whatever Model T is, let's just do it manually real quick just to get an idea if it's in that range. 50 fib is all the way down here, somewhere below 674, it looks like. So we're going to need to mark that just in case, right? Just in case you've got this wedge up here. In fact, you know, this would be kind of a bearish wedge. Looking at that structure, just spend a lot of time looking at structure and trying to understand what's going on from the structure. And number one, what would change that structure? What would signify or tell you that the structure is now broken? Okay, so if I have this structure up like this, then where is that line that would break it? Is it here? Is it here? Wherever it is, I think it would probably be that one, but definitely this one would break this upward structure back down, right? So you could argue that just breaking below here is going to be breaking this structure, which is the Model T. I would probably not argue with you on that. So anyway, just wanting to give an idea of you know, when you're looking for stocks that you're going to trade, you want to know the hourly 4-hour structure, the 30-minute structure, the daily. You want to pay attention to the volumes, and then everything else flows from that. Okay, what's happening with the sector? What's happening with the you know, that particular stock? Is there an upgrade? Is there a catalyst? Is there, you know, that those are all then the next level things that I'm going to study once I have something that I've identified as, hey, I like this stock at this level. Okay, so just real quick, wanted to give on why we look for these block orders and why our trades generally center around block orders. And a lot of time those wedges form just right after a block order. Sometimes during them, but generally just either right after a block order. You know, something like this. What day is that? That's 12/17. You get into a 30-minute on 12/17. Let's see. This is 21st, 16. Where's the 17th? 16th. We don't have a 17th. So we had a wedge up here that actually we had the top marked and the bottom. We probably had the bottom marked, but we took it off because it violated it. It already had started the down move on this and broken this wedge. And then of course, you know, Taco came in. But anyway, that generally after a block order, you're watching for those wedges, and then those wedges tell you if the block order is strong or weak by breaking upwards or downwards out of that. Okay, so using that same thought, okay, we've got obviously a block order on Netflix. You've got 3 days, okay, we'll go to the 4-minute next, but you've got 3 days. If we draw our line across, you could see that this is into this major basing area of the stock. Below here is big time, you know, where's the stock going to go? You don't want anything to do with it if it loses this level, because not only is it a loss of the level, just like, you know, here's a block order, 1, 2, 3, 4 days, 3 days, a block order, 3, 4 days, block order. Now, you know, a demand zone is sitting here, right? It's been respected. It's been respected again. I'm now going to come down to my 4-hour and let's see what's been happening. How many tests of that? Okay. So I only had the one push through that zone that immediately recovered. It came back and touched in 3 more times. So I've got 12 hours showing me that there is a block order of buying going on at this level. Okay. So as long as they're able to get their fills, they're going to just, you know, the shenanigans then that we always talk about, that's fine. You can do whatever you want to. If I make my entry as close to this level, as close to that level as you can right here, okay, then my exit is going to be a new low below here, because that's when you get into stocks that just have eternal drops. There is no longer a support for that stock at that level. And now you don't know where it's going to go. You can make some assumptions of the next level that it could drop to, but if they're trying as hard as they can to defend this and it fails, they may, depending on the institution buying, they may dump it. And those are the days when you see those support levels that were existing and had just been created fail, and then you get a long red candle. It's because someone bigger was in the water selling. And that's why we want to trade compressed stock. Okay, I want to be compressed, and I don't want to just say, let's just see. As much as possible, you know, if you're really nice and compressed, this is only $1. Well, I may give it 50 cents, but I'm not going to give it another $1. I'm just not going to do that, because it'll be $2, $3 before you know it. And you can always find another trade. Just accept the loss and move on to the next trade. So right now we have Netflix, which is one of my favorites, because it's probably going to come back down with the market. If the market is in fact going to have a new taco setup, then this, you got some resistance that had shown right through here. You know, this was the top of the resistance, and then it kind of trapped with a new high, and then it came right up and closed at it. So this was ready to go, but now you're probably going to get at least a 50 fib retrace, which I don't think we need to even do that. 82 to 86 would be 84-ish area, right? So an 84, what did that just do? Somewhere at the top of this bar right there, 84.23. We need to just watch this, and if it can compress down through it, back down to the base, a decision would be made based on what the macro market's doing. If the macro markets are at its absolute worst, then you know, case scenario, and this is holding, that would be very bullish in my book. So we want the stress test. Give it a stress test. Show us that the big money is supporting this level. But this is a good stock right here to be watching for us, to see if we can buy into a bottom. Now, we've got this pattern going on here, okay, kind of collapsing a little bit. So we need to get that resolved, right? They wouldn't let it break and even fill this gap. And so we need to get resolution of this pattern, because that's kind of a bearish pattern. You have an imbalance on the 4 hours all the way back down, minimally to here, but I'd say all the way down to here. You've got an imbalance, because the imbalance is after, okay? Whatever happens after. You can look to the left, but this has its own area, right? That was just 2 30-minute periods here, came down pretty quick, and then 1 30-minute period back up. That's an imbalance that definitely, if they're selling, it's going to hunt that imbalance to take that fair value gap out. Okay, so above the high, 86.30, then opens up the gap fill. 87.02, not much of a gain that you could make off of that. And then you could see almost on a 4-hour chart, from a block order standpoint of who's selling, okay, there was both sellers and buyers here in this range, and then they dropped it down to this new low. And this is why one point that I always make and want you to just have in your notes: after a long period of downtrend, whenever a stock has an opening that is a really low open, creating a gap, those are generally the better times. If you're going to make a risk buy, those are the times to make a risk buy. Okay, so that is a risk buy opportunity, because generally after a long period down, that's a clear out stop open, trying to just get rid of everyone. And this is never going to stop. And then suddenly it starts moving back up. So I like the down open on a stock that has a long downtrend. Okay, once it's made a long downtrend. Remember CRDO did that? It opened pretty hard down. And I said, if that's not the end, if that's not the bottom that day, then this is going to fail. It's going to lose my money, more of it, because I was already down to $1.20 something. So, but it just started moving up and then just never stopped until it got up to 166 or 7 or something like that. But anyway, big down days after long drawdowns are good times to take a buy early and see, and I'm not saying hold on to it if it drops, because it opened here, it dropped and then came back. It'd be, what's your tolerance? This was an open somewhere, whatever this is, 82.50-ish, looks like about 82.50, down to 82, then came right back up. So whether you just watch that open and it came down, and as soon as it comes back up, go ahead and take it, and that's your stop from here to here, now that it's gone up above it, or whether you just don't buy at the open because of a big down open. And of course, pre-market, I would buy shares in something like that. Okay, so let me look at your question. So an imbalance is when it takes multiple periods to go one direction, and then a single period, a much smaller number of periods to recover the move. Kind of similar to a fair value gap in that the move is fast. Yes, so by nature, fair value gaps are an imbalance. Okay, it's an imbalance of order flow. So there's not a natural order flow. It was a period where everyone only had buy orders, for example. In this instance, you only had sell orders at the open, okay, into the open going on. But then the imbalance happened, over that next period. This came up to here. I don't know if it rested. We'd have to look at the day. It looks like it may have opened here, dropped, shot all the way up to here, rested here, creating the green candle, versus open here, down, or let's see, open here, up, all the way down, and then all the way back up. I don't think it did that. I would imagine that this opened here, dropped down, and I don't know, let's just look, 121. I have no idea. 121. Why don't we just look at the chart? Let's go to a 5-minute chart. 121. Okay, so what happened is, yeah, so it opened, this is a green candle, so it opened here, dropped down, came back up on that 5-minute candle, dropped in, dropped to about Model T of this 5-minute candle right here, and then it shot up all the way, pulled all the way back down then, and then started making a move. So if we go back to that 4-hour on the 21st, yeah, so it opened here, and that 5-minute drawdown is hidden in here. I'm sorry, it opened here. It had a 5-minute drawdown, and then it ran all the way up, and then it pulled back in that 30-minute period. And then it came further down at the end of that 30-minute into the next 30 minutes, and then pulled back up through. So this right here is your imbalance, right? This is all order flow to the buy side. So you have opening imbalance, which creates gaps. Okay, opening imbalance is gap. This is an opening imbalance right here. It's an opening imbalance all the way down. This is where the order flow was into the close of yesterday. That makes sense? So you had buying and selling, structure looked really, typical, ups and downs, order flow just going, right? Then you have an opening imbalance. That's generally what we're trying to catch for push trades. We're trying to find an opening imbalance trade in order to take advantage of that. Okay, so an opening imbalance to the upside. Well, hey, this is opening up here, we want to get the push trade. So what are we going to do? We're going to look and say, where could that go? Okay. And so, you know, where would it push through to? If this comes up through here, then we'll have this, right? We have this wedge, kind of have two of them. Okay. So we have this wedge sitting here. I should have drawn it all the way down, right? So you want to get on top of supply, okay, to say this is the first, you've got a break of structure right now, okay? This is going down, very clean look to it, right? You've got a break of structure below this corridor, and you know, again, this right here kind of skews it. I would almost say that right there is your corridor, right? So you could say that, is that a break of structure? Well, yeah, technically that would be a break of structure. Is it a change of character? No, it's not. What would be a change of character? I'd have to get above that structure right here for that to be a change of character, okay? And then really you would need to break above here for the full change of character. But this would be your first clue, is if that candle had resulted in follow through, that would have been your first alert, but your break of or change of character would be getting above here. That's your true change of character from a downtrend now up on the structure to the upside. Okay. Otherwise, you're going to be finding yourself looking for change of characters that aren't like that. That's not a change of character to this right here. Okay. It's not. This is not a change of character. That's not a change of character, obviously, to this. So, and this is where you're always looking at your Model T's, right? I'm keeping track of Model T on all of this, right? I want to know what's Model T from here to here. I want to know. I want to know what Model T is from here to there. I want to know what Model T is from here to here, because we don't know what algorithm they punched in, but generally it has Model T built in. You just don't know which one. But once you figure out and can see it on the chart, which one they're targeting, then it becomes gold to us. Okay. So you could guess, you know, and the first guess would be, look, if I got into this, then I'm going to at least think eventually Model T from here to here. I'll be conservative. That would be my first look that I'm looking for. Gap fill would be my desired trim. Okay. I'd probably, it depends on how aggressive you were, you probably could have gotten a trim, but otherwise you're sitting there waiting for a gap fill to trim. And then you have Model T from here to here. That is your short phase trade that you have. Okay. If I'm going weeklies, this is what I'm having to target, 90, somewhere in 90. It's a $4 move. It's not a bad move. Okay. So it's a $4 move. If I'm thinking that that's the bottom of the stock, obviously I have a massive gap all the way down, all the way back up to 103.82. I'm sorry. It's actually way up here. This is 4-hour charts. Have to go to the daily. And we can see there is a fair value gap. That gap is not an actual gap. If I have pre-market turned off, which I do, this is a fair value gap. Okay, so this right here, though, 103.22 would be a target level that I would have. Why? Because generally they're going to take that fair value. What just happened? 103.22. No, I'm wrong. What is it? It's 101.77. 101.77. The reason why that's your target level is because this is where generally that fair value gap is going to hunt. I don't want to be, what if they don't make it, right? That's always the concern. I want to get as much out of a trade as I can, but I don't want to be left holding the bag after a nice run. And so I would sell into the fair value gap base as if this were a gap right here. Okay, that's how I would do it personally. Okay, so that's anatomy of this trade then would be, where is all of the 50 fibs, right? From here down to here, I want to know what it is. From here down to here, I want to know what it is. Because if this is reversing, what this stock will do, I'll make a prediction. This stock is going to go from here. If this is a bottom, then what will happen is the first move back up is going to stop right here at the 50 fib and consolidate. That's like a $8, $9 move. It's a $10 plus move from the bottom, right? So the 50 fib from there to there, that will consolidate. And then what do? You look to your left and you go, do you think it's going to consolidate there? Okay. Do I have any legacy order flow that, that's the low authority that they had to sell? You can't, this guy, I've got a multi-billionaire client and he said, you can't sell below X price. Okay. Just like when they're buying, you can buy from here up to here. That's where you can buy. So what do? Institutions get to work. They make their buys. You see that capitulation moving up and down, because when it gets to the top of that zone, they cannot buy anymore. And so they're going to drive the price down. And, obviously on lower volume if they can, but sometimes they have to start with a little more volume to get the ball rolling because they don't want to create momentum against themselves. And so that's institutions. It depends on how big the block order is that they have to fill. Is this block order done filling? Well, the only way we can know this block order is done being filled is if it gets up on top of it. That's the only way you're going to know if there's legacy order flow sitting here that is not approved to sell below that level. Okay, so the only way we'll know is once it gets above it. So it's going to be natural for this stock, since that's the 50 fib and you've got a second technical reason, you better be gone. Okay, you better have taken the majority of your trade off of that. Now, if you're going shares and you're just, well, hey, I want to be long shares, well, then you may say I'm up almost $8, $7, $8. Maybe it depends on what day that is. If it's a Thursday, I'm coming in with a pretty tight Friday put. Maybe I go out to the next Friday and take $1 off of that to get it the same price, but have a further week. Do I want to do a covered call with a put strategy? Only if you think the markets are topped, and only if you think that the stock has significant, you're seeing a block order of time. It just cannot break that level. Are they continuing to attack it? If they're continuing to attack it and you're just seeing wicks there, well, now it's a coin flip. Are the bulls going to attack? That comes into the whole macro market. Is this stock going to go against the macro market? Is the macro market giving us wings? So I would read the attacking of that as eventually it's going to break through. I could exit a call. If I'm in calls, I'm already done with the trade. I'm now waiting for this to break to the upside. Okay, so you had a wedge sitting right here. Really pretty wedge, right? It broke down for a downside trade. So I got to get above, crossover minimally, but I want to get above the block order area here where I see this meet. This is why I'm always looking for the green candle. In this instance, we don't have one. So it would be this top right here, because that's probably where the block order is sitting, is starting here down into here is their approval to sell. And that's kind of how you can read that. What's my approval to sell? Well, they can't sell below here, so they have to kind of, carry the dead weight a little bit, right, in order to get their sells in. And then they just, you know what, if I get below here, I'm not going to be able to sell. I'm just going to sell it. And then they just pound it, in that 4 hours, because they see that this is breaking down and they're thinking they're controlling the narrative. There's other players involved. There's other forces involved. And so they just dump the rest of their order. So to me, if I'm watching this, I personally think this stock would break up through here. I think the block order sold out to get their order. They want their commission. So if they're approved to sell down to a certain level, and it could have just been to here, doesn't know, but they started it. They started the momentum, okay, with that block order. And they just said, let's just finish it. Let's throw it. That's why stocks on the reverse side, we always are looking for running away, because now they're no longer creating resistance, trying to hold the stock down in order to fill their block orders. They're now done. And what do? I want to help myself. So my initial last buy, as I see some buying pressure coming in, maybe it's a day the macro market's looking good. Maybe there's a catalyst, whatever the case may be, all of a sudden you see that green candle just shoot up. Well, that's them throwing their last remaining part of that block order. They're throwing that out and just getting it all filled because they want to get paid. And they certainly don't want to miss it if the stock is going to break out against their ability to any longer control it to the downside while they fill their block orders. That is the dynamic we deal with. Okay, that's our world, and we're trying to discern that based on what is presented on the chart. Okay, so hope that really helps in terms of just how we are looking at structure. Okay, and these areas of structure here that we get. Okay, these are your order flow areas down in here. Okay, so we need to pay attention to each level that is hit and how the stock reacts when it retraces 50 fibs. That's why all of those are so important, is it gives you a signal of, is there more selling? Is the buying coming in now? Is it just a block order that they have to get back up to a certain level in order to fill that block order? Maybe this was their range, and so they pushed it back up, kind of that retest, and then boom, they dump on it. Those are things that you can kind of look for when you're looking at the macro structure of a market. Okay. All right. But anyway, Netflix, we'll watch it. There's no hurry in this stock right now. If it pulls back down and you can get a compression trade, that would be my favorite, as if it gives us one. So Netflix is one. Okay. Just because of where it's at. Okay. Tim, we're going to start by drawing this initial wedge down. We've been working outside of the wedge, testing back to the wedge on this stock. It's kind of from the base low here, where a flag exists. We see a block order here on the daily. 1, 2, 3, 4, 5, 6 days. 6 days of support buying at this level. Okay. You could see when it fell down through it, it tried to hold it for a day and then it fell down below it. That created then some sellers, whether it was some of these, I doubt it was all of them because it would have been big down. So some hung with it. It looks like the mass majority did, because then I start looking at volume and I see all of this was low volume. So whoever was buying all of this did not dump on the stock. In fact, they came back in and they bought back up to their level and it started again. So there's some big order that has the ability to buy in a zone, and we need to be paying attention to that. Okay, so it kind of created this Darvis box almost look to it. See it? Look at that. Pretty good right there. Okay. Now it's never just one direction. Your block orders work. This could be a selling block order competing with a buying block order. In other words, they can only sell in this range. So it gets back up here and they get this imbalance move and they sell it immediately down. Well, that tells you that there is a block order seller sitting here as well. You've got a block order buyer, maybe multiple. You've got at least one block order seller. this is their range that they can sell because the volume selling is intense in this zone. It picks up, okay? That's what you're watching for. It's picking up. So ultimately, you need to see who's going to win this battle, okay? And so you can't make a move on this stock without seeing who wins this battle because it's a pretty good one going on right now. And so you see where it's come back up to is this retest zone right here into this block order that was a buying block order. Boom. When you get these wicks that then goes multiple periods holding, that's a block order, okay? You're watching then for the breakout of the block order. I don't know if that gave you a wedge or not. If it did, that's your best setups, okay? If I can get a wedge set up, that's my favorite, okay? So I don't know if this one, it did somewhat. I'm sure this was some type of a wedging going on here. It got pretty tight on the bodies. That's why you want to use the bodies. It'll give you that first indication that, hey, I got a body close above. That tells you that they are buying this stock. Otherwise, you get it back up to the top of a sell zone. If they didn't take advantage of that and sell it, it's because there's buyers going against them. So again, I think you have competing block orders going on in this zone. And that's what's creating a Darvas. That's what creates a Darvas box, competing block orders for a period of time. So now we just have to wait for this to break, okay? And so, you know, where would you put that? Well, I would look for the change of character then back up above here is the first really chance that you have. Doesn't mean you can't take short frame because these short phases give opportunity, right? So you see this right here. You've got a wedge. I've got multiple wicks to the upside. I've got only wicks down here, really, that I could trade. These can't do these. You got to get below here. And so this opened down here, right there. It went, I don't know if it went down, up, down, right? But it closed here. So it probably, let's see, it probably went up, came all the way back down, and then came back up. So it kind of opened with a retest, opened, went and retested, fell down below, came back in, retesting this base structure. And then you're just watching this base structure, and then look what it gave you, another wedge. Actually a bearish wedge sitting here on the 30-minute. Now you've got a whole bunch of wicks on the downside. So whether you took the trade saying, if this fails, I want to be in, and hey, I see retesting, I'm just going to go ahead and get in a short, and if it breaks above, I'll go ahead and get out. Or if you waited for some wicks to show up, and then you took a trade on the break of that wick, okay, then you still would have had to hold this into the next day. That's always the thing. Look at that. Would have had to hold into the next day. Good news is it was closing at the base of this structure, so it couldn't come back up above on top of that structure. So pretty good indicator there. And then you got a nice whoosh open. But right now we need to watch this. So yes, that's kind of a bearish wedge that we had. Let's get rid of all this and now look and say, what about this structure here? We've got this and we've got this, okay? So now that's more of a bullish looking structure. Still can come all the way back down and maintain as long as it doesn't lose this. This is just like we look at on a daily chart. Oh, I'm sorry, a 1 minute chart when we're drawing our lines. And I'm like, guys, it can't get below here or else this is not a bullish structure anymore. It's a failure, right? So it could extend though. This could just keep on trucking if it wants to down to somewhere right in there. Just stay above that. If you lose that, now the structure is gone, right? You're no longer in a bullish wedge. You are in a trick that it was pure selling. Right now it's a bullish wedge. So my first look would be is if I break this wedge to the upside, I do have at least a single point of wick, but I kind of like this candle here and that one here. I would probably defer to this one, unfortunately, 69.60. I say unfortunate because it's another dollar up, but that would probably keep you out of some trouble too, because the best it could manage when there was a block order sitting there was to retest, again, fractured. Best it could do is retest into this zone through here. If it gets above that, at least you know this block order is now gone. So 69.63 gives you the best opportunity. Obviously, you had this wedge going right here that broke, it gapped below that. Could have taken a trade on that breakdown, would have had to been really patient, and you would have gotten at least a trim into close. Okay, so there's your 30-minute view. But anyway, you've got a bullish wedge. Here's an example here of dreaded H's. Dreaded H, sideways. That's kind of getting close to this base here. You better not lose this, because if you lose this, now I don't care how you would want to read this. This is a bullish wedge. Number one, the angle of this is terrible. So this would be a bullish wedge all the way to here. But if you break that, you could forget about being a bullish wedge. Okay, it's not a bullish wedge now. A bullish wedge is supposed to be because there's buyers that is driving price down to make their buys above their initial buy level. Now you come broken all the way back down, and now you're breaking below it. No, that's not good, right? So you would have to wait for whatever the finish is going to be. If there is another demand zone that it gave you, and I'll correct that in a second. Okay, so you could see you had this area here with a bunch of orders that lasted multiple days, popped up above, drew down below, and then back up. This is so tricky, very tricky. So you're sitting here watching, you're watching this. It keeps drawing way above where I want it to. You're watching this box here, and it breaks below it, it breaks above it, it breaks below it. Very tricky before a big run. Usually when you get these, massive moves across and back across, there's a much bigger move coming on the horizon. Okay, that's your shakeout move, is to do that. And yes, that is a head and shoulders look to it right there, right now. Okay. So again, we'll watch and see how it treats this. We'll make this a good little case study. See the angle? Where is that? Let me find it. This is what we were marking on the other one, on that 30-minute chart. You see the angle of this and how narrow this is? Those H's were forming, dreaded H, dreaded H, dreaded H on the 30. And then versus this. This is a bullish structure. Okay, this is a very bullish structure right here because of the angle that you have. Wide area, much more order flow, creating this capitulation look to it. Someone is shaking someone for a much bigger move. We don't know which way. Okay, so just another example. All right. OSS for clay. Why not, right? Why wouldn't we pay attention to this stock? Okay. So 4 hours, you could see you had a 4-hour block order here, one of our favorite patterns on this block order. One of our absolute favorite patterns, the holy triangle, right? I love the fact that it was below here. You can't take the trade. You have to wait for the trade, okay? You got to wait for it to break. another structure, right? So you have down structure here. So this would be the first thought of making a buy, is breaking above here, in which case now the rule of the green candle, that's the lower one. Here's one. This right here, I would take the higher one. Make your buy. It's 725. So this, you put your buy signal here based on, hey, you found this on a whenever, Sunday afternoon, Sunday morning, we found a great structure. It broke to a new low. I'm going to watch this stock to see if it can break through 725. And if it does, I'll take that trade. Okay. So this is what we're hunting for, is structures like this. Well, what do we've got? We know we have right here, there was a block order on the sell side. Okay. So you had a block order on the sell side, and that created resistance. And it was shown right off the bat with this failure candle, 4 hours worth, right? So it's not like a minute of, hey, it's just resisting there. No, it's 4 hours. But the buyers are still there. It didn't even come all the way back on that 4 hour period, but you've got a fair value gap that was created that morning, right? That day. So if there's a block order of sellers, where do you think it might sell down to? Okay. So if it loses this low, your initial thought is going to be not this. My initial thought is Model T between here and here. That's always going to be my first thought, is I want to make my buy. If I'm trying to go long this stock, I'm not willing to risk that it will fill the gap. Now it did. It did. It eventually did. But if I want to go long a stock that I'm loving on the macro view, okay, I don't want to wait just to try to get the absolute, hopeful bottom price. I want to be in the stock. I'm not in it up here at 10. I'm in it down here at Model T, somewhere in the, underneath 9, 870 range. Hey, so I'm going to buy that 870. And now it got down as low as 7. It flashed 795, filled this gap. Here's the $8. You could add if you wanted to on the gap fill, because after a gap fill, what happens? Okay. Most of the time you get some type of A move. You don't know if it's the bottom or a bottom. Well, if you had waited to see, you would have missed it, because it was the bottom, and they gapped it just to prove a point, left you lurch, and then got above that 4 hour candle, closed above what you knew was a block order sitting here telling you it's gone. Now you're thinking upside potential, right? Because they shot this through this on a gap up. That's a lot of buying interest that was continuing. Okay, so now you get the continuation. It gaps up again. Same scenario. You now have block orders on the 4 hours saying they're selling here. Do I want to take advantage of this pushback up, knowing that I've got hours and hours of selling at this level? That would be the time if you wanted to. Okay, most people are all the way over here, and then it's all the way down here. Okay, and your premiums you could have gotten here, you could have been decayed to here. Just go ahead and use the block order. That's 4, 8, 12, 16, 12. That's like over a day telling you it cannot break above here. It can't close above the body. Okay, these couldn't close. In fact, a little bit below. These all formed a little bit below, telling you the block order is now dropped their range of selling. Okay, and you can't do it on one candle. I do it sometimes on the intraday. You'll hear me say they lowered their ask. Watch for the lower ask, right? And that'll tell you then if the sellers are there, and if they have either a block order, you'll get the bouncing in that zone. If it's not a block order, they just have a sell order and they can sell it anywhere they want to, then they just will keep selling. And that's where your dreaded H's come in. Okay. They may take the foot off because, they're getting bonus based on how much they sell it, but maybe it's not the hugest of orders and they just want out and they have other fish to fry. Hey, this client wants these sold. They just said sell it. Okay. Well, let's just sell it. If they do it in a block order, then, or a market order, that's where you see the market just zoop, right? It's just a market order. They had no constraints on how to treat the order. The customer just said sell it. The bigger, smarter customers, understanding range dynamics, they're going to give a range, and that range is probably going to be between a level that they have seen. Okay, so it would be from here to here, you could sell. Okay, I know that there's demand on this stock at this level, so you could sell down to here. Okay, you got to be done by there. And sometimes that's why we think about acceleration into a low, because it's not above and beyond the scruples or lack thereof of institutions to have Mr. Smith with a block order sell and Joe Jr. with a block order buy and use one to get the other. It's not at all unusual. Is it ethical? They sold within the range that they were given. They bought within the range that was given. Is it unethical? That's for you guys to decide. But that's telling you why a lot of times the acceleration candles are your favorite candles, right? Because that's them finishing their block order. Okay, they only have approval to sell down to a level. The acceleration, the one that we're looking for, is the V that tells you that block order sell that they accelerated at the end and just dumped it because it was approaching their zone. They wanted to use it to buy for either themselves or for one of their buy side big clients. These are the dynamics of what you are seeing play out every single day in the market. It's why I get pretty excited when I see that acceleration sell-off, because that is the dynamic of a market order being a block order being finished. Yes, if it closes below the wedge, absolutely it would give you pause. Absolutely. You would need to wait. Okay, you would have to wait on that. If you're in it, I think you would have to at least reduce your holdings. Okay. So OSS, it's a big move here. Do you have a fair value gap sitting here on OSS? And the answer, of course, is yes, I do. Now, it came down as far as here. So it already took out the fair value gap from here to here. It already has taken that out. I've got a fair value gap all the way down to here on this. So if the markets are going to have a sell period, where do you think we would be watching to make buys on this stock? Okay, all the way back down at 9. If the markets went into a tough period, okay, then what we're going to look at is first $9, okay, and then we also have a fair value gap between here down into right here, kind of the top of all of this structure here. So if this is just a taco trade, that is a bad taco trade, meaning the markets do pull back significantly some, this is what you're looking for. If the markets are turning over and we're going into an actual correction and you're going to then break structure to the downside, 727. Rejoice, be happy about it, because I think anything you buy here for the long term, you're going to be able to get at least $12 for. So just take advantage of it. Anyway, that's your structure. All right. See, but I like this stock. You do need to break through this for continuation. Unfortunately, when you have a candle on a 4-hour that has an inside bar, you cannot do anything other than just say it's got to be a continuation. 1275. You're guessing. So it's better just to be in if you want to be in down here, if you're going to do that. So, but you have this wedge here that, you are a little bit below the true wedge, right? 3 points of contact. You would have walked into this day right here with 3 points of contact. You closed below the wedge. Okay, so now you have to watch and say, is that telling me that the macro markets or it is going to come down? You could see The 9 EMA on the 4 hour turned over. The 20 turned down. Okay. The 50 is not ascending. It's starting to flatten out, and it would probably just go sideways down into 10. Okay. As long as it stays above 10, this would just flatten out sideways. Okay. So whatever the one below here, you could see how this just barely started to turn to the downside to 50 on this day because it was below the 50. Okay. So it had to get further down below to get this to turn over. And that was really your indicator that things are about to get interesting because all your EMAs got super tight and then busted up through, right? Let's go to CRDO. It is an ascending triangle a little bit there. Yeah, that one was. Okay, CRDO. Okay, so let's first look for block orders. Where do you see the block orders on CRDO? Okay. And you've got multiple block order areas on this. So you've got a lot of buyers and sellers that are happening. That's when the longer term wedge is going to be produced. Okay. So you're going to have a longer term wedge form here, which still has plenty of room to do. But generally you're going to get a longer term wedge when you have multiple competing block orders, buy, sell. I mean, just look at this. The obvious block order here breaks back again. If you're taking this trade, your first trade would be here. Well, what if it's a block order and they're not done? They're going to bring it back down. Well, then yeah, your risk is you have to hold. You've got to hold. The day that I was looking at these before this big move happened here initially, right? Or this one, I think it was just drawing down. The reason I was willing to hold is there was a block order sitting there. And I'm like, if it holds the block order area, this is going to be fine. But if it loses it, I don't know it's going to come back. And so, but it did. It held it. Okay. That was this one right here. It came all the way down and it actually flashed through. This was one of those cases where the morning that this happened, I said, if that's not the bottom, it's a total loss. But because of the liquidity grab, that should be the bottom. Okay, that should be. And one of you clowns bought that day. I think it may have been Jay or Warren. I think it was Warren because he wasn't here. So, but he just bought, and so he got the full ride that we had to suffer through the down period. But you had so many block orders on this up and down that I just was like, let's just wait and see. And then it formed this nice little triangle here with a ton of wicks. And once it gapped up above, again, this was so obvious that they can't give it to you. They gapped it that day. Okay. So anyway, right now, what do you see? Well, I see that there was some legacy of this block order sitting here. Okay. I could see that whoever was buying here didn't get their fills. Probably was pretty upset. And then they got lucky right now. But you got head and shoulders potentially. But anyway, they're still, hey, their demand is to buy. So they're going to buy. They're going to complete the order. Hey, no matter what. Doesn't matter even if they are someone like us and they could look at a chart and say, hey, if you lose this next level down there, this stock's probably going to drop. They don't care. They have an order to fill, and that's how they get paid. They're going to fill the order. They're not going to call Joe Schmo unless they're trying to, do something impressive and say, hey, Joe, maybe we should wait and let this break back above that 142.30 level. And if it breaks that 142.30, pretty good chance that this pushes on up at least to the top of this range here again. How about we do that? But no, they're just going to fill the order. They can't do that for every client out there. But anyway, this closes below this structure. So you're back into this situation on this stock. It's got to hold this level. If it doesn't hold this level, it's gone. Okay. It's gone. So is this the 3 top? Is that triple top they talk about? Up, 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 and then down, turns over, and then down. Made a nice big move here, did hit the 50 fib, and then it turns over, and now you are going to get some downward period. Well, if the macro market's going to fail, it's going to fail. And then what do we look for? We look for the next block orders down, okay? And where are those? Well, we've got a block order here. And we got a major one back here. What did I just hit? Something. Major block order sitting right here. So this one is at 106.01. This could be if a correction would reach here, a failure of this level, I'm not sure it would reach there. You've got block orders here. Here's a block order right there. Well, that's that base. Never mind. Kill that. That's the one it's trying to respect, is this right across here. That's it. So if you lose that, you've now lost, you've eaten through that block order. Now this block order was all the way to right here, 120.96. Which happens to be the previous resistance area. So we need to really watch this if it gets down here. 121.96 right in here, got a block order, right, that's your block order signal, okay? You're always looking for that initial wick. When it's free falling through, they start their order. They get it going, right? Their zone is somewhere in here. This is their zone. And it fell down, they started the block order right here. And then, boom, whether it was a lucky day that they got or whether they induced it, I don't know. Whether it was just a lucky down day that they got a low buy, but they bought it right back up. This is telling you there's a block order sitting here and they're buying, okay? And then you just take the base. This is why the bases are so important. If you look at the base of the structure and you look for the low close, that's why I always am talking reclaim, because low close is the lowest they're able to buy. I'm sorry, is the area of where their buy order said that they can buy. This is bonus for their customer. This is where they said they could buy. So they're going to try to continue to buy if the stock is going to be selling down after coming back up. They're going to try to, they just turn their block order on and they just sit and buy all day long at that level because it's at the base level of their approval. Okay, so they're going to sit there and they're just going to buy all day. But they took advantage of this. That's why these move up so quick. Is it's below the block order. They're authorized to buy way up here. Do you think they're going to buy? That's what creates the wicks. You know they're going to buy every share that they possibly can. Okay, but they're depending on how big the order is. They've got to be careful because if they buy too quick, they create momentum. And if they've only gotten half their block order filled, they just are their own worst enemy, okay? Because they created a momentum trade now. So these come up pretty quick, but you'll notice they generally are like, they do this very quickly though, like a 30-minute period. It'll come up. I don't know if this was in 30 minutes or 4 hours, and then 30 minutes up, and then 3.5 hours of just sitting here, absorbing sales. Someone ought to go look at July 22nd just to see how they treat block orders, okay? Because that's my guess, is that they were sitting. This one, base of it is right here. You can see, boom, the top. This is probably where they were authorized to buy to. This is your zone. You can buy this. I want you to buy me 280,000 shares of CRDO between here and here. That's their approved zone. So they're just going to sit. They buy it all up, and then they just sit and buy. Maybe this was the end of their block order. You don't know because they did send it. Maybe this day started the end of their block order, came up, retested, and go, right? Natural market flow at this point. But block orders, you just want to mark all the block orders and know where they are because the markets will hunt. When they fail, This is going to hunt 121.96 if this fails. It absolutely is going to come into this zone. Okay. Right now it had a gap and it targeted the gap fill. And that's kind of then became a support based on the fact that there's a block order. If that block order is no longer there, it's just going to drop all the way into here real quick. Make sense? Okay. So this is everything being used. Hey, I've got a gap. Generally, when a gap fills, stocks bounce. I'm going to use that. I'm not going to watch for the base of the block order. I'm going to use the overrun of the gap fill this day. Would be right here, and I want to watch and see for a V. If I get a V, I'm going to buy it. Okay, because I've got a gap fill. Now you have a second technical. I also have a block order sitting here. Previous resistance becomes support. So I've got another reason to buy. This stock is not only the gap fill, but I've got support right here. I would have to then think through very carefully, if this hits a new low, am I going to get stopped out? I would be say, don't get stopped out. You got block order sitting right there. Strength, previous resistance sitting right there becomes support. Multiple reasons for you to hold a stock, even if it broke that. If it broke through the base of the block order, you got to stop. This right here, the low close, you got to stop. Even if it drops down and comes back, it's better to re-enter the trade than it is to hold, because you don't know what's going to happen, okay, below that block order. So the base of the block order close is your low close. This here, right there, that's that low close, that's it. You have to stop. You don't have a choice. But if it is a block order and it's strong, it shouldn't do that. It shouldn't close below there. Right? Because they're going to be buying. They have authority to buy there. They got lucky, or maybe they created, I don't know, because of imbalance. I don't know if that was the open of that day, probably. Or they saw an opportunity for an imbalance trade to on less volume, shoot it down and then shoot it up to get easier fills. Whatever the case, that's stop hunting. That would probably be the second half of a day. Stop hunting. This would be a great stop hunt. What is that? This is on 820. If this is 820, then that's what that was. That's 819. This is 820. That's 820. So this was an opening stop hunt right here that came back up above for your block order. Probably got that block order the day before. And so they're like, okay, if I'm going to buy, I can't let this open up here. I've got to drive that thing down. Anyway, it's more important to look at the after effect, meaning I can now see that a block order formed here, okay, by it breaking back above. This is now a block order. So you first always want to look for a wick. Those are the easier block orders to see, okay? If I have a wick on it, then that generally sets up that block order better. Sometimes they don't. Okay, this didn't have a wick here at all, right? But the ones that have a wick are generally going to be your better block orders. Okay, that was a good one right there. All right, so in terms of CRDO right now, I don't like it right now. Looking at it, right? That doesn't look too good. Kind of a crossover. So this one is not a trade for us right now. 50 fib is up there at the top of that last top. I want to look at that. Where's the 50 fib? 149.80. Okay. Looks like that may be where your true resistance order flow is. That's right at the top of where all of those ended, 149.80. I don't think you're going to get something like that. Let's see, then this is 120. Oh, So full Model T would be somewhere in the 121 area. And we have a technical block order at 121.96. We'll watch this just to see how it treats it. Got this 30-minute. Let's look at the 30-minute now. 30-minute structure. That's how it ended. Okay, you can see that 4-hour block order here on the 30-minute. You got a block order sitting 30, 60, 90, 120, 150, 180, 4 hours. So, boy, they had to really be patient here on that to get their fills. But had a block order sell sitting here. I have to go to a 4-hour to see it, but it's there. I don't know if that's legacy from this or not. That resistance there. Ton of structure across here. That's your pivot zone. I think we had already given that as a pivot zone. So that's your pivot, play upside, downside on the market with that. You could come down to here. Boy, it didn't have a whole bunch of upside. It came back. I would say probably your pivot is more in this zone. What's that high candle there? 148.15 area. Anytime you're above 148.15, look for a push, even if it's only short-lived. Look for a push trade, even if it's short-lived. Okay, if they take the energy to get all the way to there, watch for a push trade, even if it's going to come back down. And then if it fails, look for a drop. This is your crossover. Now they take it away with gap here. They gapped it and took it away from you. But you still had the push trade through here. Even this would be one of those that late in the day, right? Hey, this thing's pushing. So that tells you they're going to probably attack the zone. But anyway, it looks like you're going to get a push trade above this area, or sell if you're above it and cross down below it. Ouch. This one, I mean, if you had been marking this, you probably would have had, I don't know, that happened in a 4-hour period. Look at the daily. You're saying the daily is no, I don't see an ascending triangle. Oh, OSS, yeah, maybe so. Okay. So CRDO, no, off our radar right now. Okay. Off our radar. I'm going to go to a safe stock. Back to safety, flight to quality, heavy cash, big move up. Okay. Great trim zone into resistance. The day I said, hey guys, resistance, trim here, right? Trim here. That's your resistance zone. Okay. Model T, look for a pullback. Okay. Gave it to you, touched through it, back up, starting to move back up. Okay. No triangle to play per se, right? Not much. Go to the 30. We've got ourselves a bullish wedge. Bingo. Okay. We need to break this 179.68 to get above this resistance zone for continuation. Flagging, traditional flag, pretty traditional. Doesn't get any better than that descending wedge right there. So first look would be above right here. 179.11 would be your first look, but you're so close to this. Just break 179.68 for continuation. Let's get this thing going. And look, if the market's going to a massive drop, this stock's probably going to go to 200 because the money's going to flow in pretty heavy. We have a room from then. Our next level on this is from here up to here, right? That's our next level. And so that's not 200, right? That's your next level. What you do have, and the reason why this made such a quick move up to this level here the first time, okay? I don't know if anyone traded that one, but the reason this made that first level move is because it was a void here. You had this imbalance, fair value gap imbalance all the way down, okay? It took it out really quick, just super quick, okay? All the way up to 184.17. So this was new trade, made a nice move. Again, you had a fair value gap all the way up into this resistance. It took the fair value gap out. It touched into that resistance, telling you that it is resistance, right? So now you have to break above that. This is where risk definition comes in. How many did if I had 10, how many did I sell when it touched into here? Am I going to look for the big score because these are out to March 20th? Or do I take the great gain because it was a great gain? Am I just going to take that and be done with it? Okay. There's no wrong answer here. There is no wrong answer. It's up to the individual about what their risk parameter is. If I'm trying to build my account, that was a great win. And I would probably sell 75, 80%, up to 100% of it. And then if it treated it down, I would come in probably to a new trade, breaking then back out and just take a new trade is how to do it. So this one was pretty extended down, and you do have some fair value gap down to here still that this could come down to, right? So this took out a lot of it, but this could extend outward here, right, into here. So this one, it did kind of the Model T thing that we talk about. This would be like OSS. Don't wait. If you want to be in the stock and it shot up like that and you get a 50 fib retrace, take the trade. If you're going shares, right? Because yes, is there possibility of a full fib? Yes, it's $3 more. Just buy $3 more. Get some more. But you don't want to miss it. You would have missed it if you were waiting for the fair value gap to completely fill. It targeted the 50 fib of this gap, that fair value gap, 50 fib. Okay. Anyway, bullish structure, get above this level, and has a good look to it. Now, what we want to see is attack this again, which is great because ultimately this new trade we went in is just a continuation of the start of this trade. Okay, so if I look at the macro picture on this stock, it's been in a huge downtrend. This is just the start of what we want to have on this trade. This is just the start of the upside. We want to break above here and get into the void, Okay, this big area here, avoid. That's what we want, the area, then the next void. So you got an area up to here, okay, it's just void. A little bit of chatter then, and then if you get above here, another big area of void. So we're just wanting to trade these voids as far as we can, right? So if you're trading this one, you got this big area void up into the completion of the cup. Back down, okay? Big area void, completion of cup, boom, draw down, okay? Come back up, create me a nice wedge that I can watch. Give me a wedge. Give me a wedge that I can sit and just watch for a breakout of that wedge over and over. That's it. A&T looks really good. So we want to keep AMT. If you're in it, I say stay in it. If you're not in it, I wouldn't get in it yet. I would wait and let that wedge break and then get in it. I'm going to go to this small stock. This stock is a winner. This is a winner. This is the anatomy of OSS before OSS made its major move. This is just now coming out. Was it? Yes, it was only $1 and it is $8.50, but there was no one buying here. So it's not like they're trying to get their profit. Okay. No one was buying it. One huge guy bought, right? But probably a goalpost trade. But anyway, there was no buyer. So you don't have to worry about all of this zone. Let's see, this day was right here. Let's see what day. That's right here. There is your start of major buying, institutions, okay? So you're not dealing with someone trying to sell and take their profits from $1, $2, $3. It's above $3. And then the majority of their buying has continued, okay, up through Friday, okay? A little bit of a sell Friday, a little bit of decreasing day over day, okay? So is this showing a likely pullback? Yeah, 1, 2, 3, 4, 5, 6, 7 wicks. Yeah. So what am I suggesting that you jump in and buy TE Monday? No. Continuation trade would be preferable. 929, fine. Be watchful of that to make sure it's not a trap candle. I don't think it would open up there if the macro market's falling. I think it would already start its drop down. I like that it closed above this structure because that would be a trap if it did fall. I would expect it to fall pretty good. Model T of this. So if you're looking to get in, this is an important stock for me. Okay, I have a good number of shares, but I did a covered call on these, no puts. So we'll see. But I'm looking here all the way down, and you got $6. We've got a block order that we could see here on our 4-hour. It'll show like a beacon in the night, right? Just a major block order here at 6. Here's a block order sitting here. Okay, boom, boom, boom. Got a block order sitting here. Had a huge one here when they sold it down this time. Big block order sitting here. Got a block order here. Got a selling block order right here, small. Wasn't that big. Maybe it came back up into it, so it could be. In fact, you've got a wick back down, locking it in. So it was a bigger block order than I'm saying. And then a lot of resistance here. So to me, this isn't defined as a block order yet. It would have to drop down below that wick, but it looks like it could be a block order on the 30-minute chart. Anyway, this would be phenomenal buys, but here's where you would have to watch, and look how the fibs line up on this. You've got this level here. So if you're like, I just want to make sure I'm in this stock, then somewhere at this fib level. 769 area would be your first buy. That, you know, I don't know on the daily where the fib levels of the EMAs are. Put that into your thought in terms of buying if it hits that level, right? But that would be your first buy if you just wanted to get exposure. Naked puts at that level, right? Hey, if I can get down to $7 with a naked put on this, I'll do it that way on a percentage, whatever. Okay. But watch that. And then here's your next one. There's your next fib. Boom, right here. And then our 50 fib is right here into this basing right here. Look how the fibs are lined. And then look at this. Tell me those fibs aren't giving you a roadmap. So if it turns over, okay, already kind of broke down through there, but I'm going to use the whole channel since I've got a channel. Since I've got a channel, let's use the channel. So a breakdown below outside of this wedge down would probably start a sell down. That's how you have to think about it, okay? Probably starts your drawdown. And you've got this wedge up. No third point of contact. No third point of contact, okay? That I'd like the bodies to connect. So I'd almost put this up here and get 3 points of contact, even if it raises the breakdown. Anyway, you got a channel going up. Let's now go to the daily and see how EMAs look on this. I think everyone should be in this stock long, like I think 25, 30 bucks. I've read a whole bunch on them. Okay, EMAs, that first 769, you've got a 20 EMA just below. So I would side adjust this to 750 area. This one, the 50 fib is just above 6. So a flash below the 50 fib. But I would be looking somewhere in that 630 zone. And I just don't personally think it's going to come all the way back down and test this macro structure. I think the bulls are on the move with this stock. Okay, got a cup completion. Now you got a second reason for this stock to pull back. Sorry, should have been prepared to talk about that. That's obviously an area that you would look for pullback, or at least for a wedge to form, right? Some type of a bullish structure even. I think everyone wants in this. What's the stock? EOSE? EOSE? Yes. EOSE. I don't think, yeah. This was an IPO back in 2020. So you're dealing with IPO sellers right now that they got back their money and looks like they're just getting out now that they can get out. Beautiful W. Nope, hang on. 2084. Monthly candle close above 2084. Get out of here. Not get out. It's gone. Okay. It's going to go to the playing on the downside to playing to the upside over a period of time. They're just buying. They're coming into this zone here and they are buying huge. Got a flag on the monthlies. So it's a Darvis box, right? Is how we have to think about that. Kind of a Darvis box almost because that's quite a few days. Go to the weekly candles. So first look would be a weekly close above 1826. And then let's go to the daily. And if the markets give a pullback, you've got this wedge. Can't draw 3 points of contact. It's actually outside of the wedge. There's your 3 points all the way extending up through right there. So you're outside of the wedge right now. Okay. Do I have any daily bars to tell me anything? No inside bar, no outside bar anywhere. Oh, outside bar. Here we go. 1650. There you go. No inside outside bar, no inside, nothing. Okay. So below 1650, you're already outside of the wedge. A break below 1650 offers downside. Say 15 bucks. So if you're looking to buy EOSE, the minimum I would do is wait for 15. Got a block order sitting right here. Got a block order right here. Selling block order at the top. That's 12 hours. No, that's 36 hours. Forget the 4-hour candle. That's serious selling. That's IPO people. Gotta be IPO people selling here. Serious resistance. Next area, 1440. The way I would read these is taco trade, 1650. A little bit more than a taco trade with a hard consolidation into almost a correction would be somewhere between these two. So taco trade, actual correction, okay? 20% of the market, whatever, 15%, 10%, whatever it would be. That's how you kind of look at these levels, okay? What you don't know is what is it going to be. Amazon, okay? First thing we see is we've got this triangle that's formed here. Sure, I'll do it next. So we've got this triangle. We've got resistance showing up here. We've got it marked already. So we know the resistance zone. I don't even know if that's true resistance. You'll know if this falls right back to here. I think true resistance is this. Meaning that we're right now, if that's the fact, then we're going to come back into this 232 immediately. Okay. There's just not a whole bunch up here at this level. So you only have this one break, these two areas here. So I would think that even this structure here, all of this, anything above this line is fake if it comes back down into there. But then you would have to watch for the crossover. So again, this would be a good downside trade. You got multiple wicks, fortunately, to help out. Looking. What's that close? 226.65. Nat, I'm going to go with the 226.47. And see how fast it dropped once it broke that wedge. Same wedge, very similar. This one's a little flatter, but watch these wedges right now. If we go into a correction, we have got to take advantage of these downside, okay? Because you got quite a bit of downside on these. Somewhere in the 210 range. You can make money on that, can't you? Okay. Interesting. It kind of is at the 50 fib Friday, just to give you completely oblivious to what's the next move. Okay, we got a wedge, got a fair value gap down to 235.23. If the markets are going to be negative on futures into 3 a.m. or 7 p.m., this stock is going to open at least at the 50 fib level, minimally. Okay, depends on how bad the futures would be, and I don't even know. I mean, I'm just saying that a lot of people think the futures are going to be negative, and I would tend to bias that direction. But minimally, you'll have a Model T of this minimally at open. If it's down to here, they took the whole trade away initially, and now really your only trade is to watch the macro level. I mean, if it broke here, you probably have a little bit of an imbalance down into here, but you really need to get below that wedge. I'd play the bigger wedges just to make sure. Let's look for block order one real quick just to see. Okay, so we had a block order sitting right here. Actually, that block order formed after the fact. Someone came in and said, let's buy it in a demand zone, put a big block order in, took advantage of the drop down. A little bit of a wick here. This is a much better one. I like it when they get, see, this didn't even have a wick. Not hardly, just, this is more of a tweezer bottom look to it, but generally you want this candle to be same size for a tweezer bottom. I'm going to side adjust this up right there. So previous resistance should try to become support here. It failed the first time, tried to hold it, failed, and then now we're back above. So, hey, something to at least pay attention to, how much buying goes on at this level. All right. Continuation above that if the futures are positive, obviously. THH. Sheesh. What are they just, was there any volume there? Why TH? What is this stock? Communication services. It resumed trading Why was it paused? Yeah, I don't think we want to waste too much time on this. There you go. Let's go to 30 minutes. Oh. Yeah. I don't know if that's short covering because they're afraid they're going to get delisted or what. I don't know why their trading was halted, but this could be short covering because they're scared of, hey, if it gets delisted and you're short, guess what? You get left holding the bag. You don't get the money. It's gone. Right? It's just gone. That's the problem. It's just miraculously you lose all your money. I'm up 1,000%. Nope. Meta turns over. First look would be you got a block order sitting here. 646.53, almost right at the top. 646.82. 647.81. Right there near Model T. And that was also cup completion pause. Cup completion sideways pause flagged. Went shot through this imbalance. See, just took out that imbalance once it gapped up first, because most people are like, I don't want to buy a stock. It closed at 613. Remember I said this day? It opens at 630. It's up 20 plus bucks, right? 20 bucks, 13. I don't know what that is. What is this? This is 613. It opened somewhere near 630. 613.23. It's up like $15 to $16 at the open right here. Okay. Most people are afraid to buy a stock that does that. But when you have a major breakout, I love those, to go ahead and buy those stocks, because if it's held in a range over a period of time, that's telling you that the buyers are coming. They're just trying to absorb as many shares before continuation as possible. So the longer the time frame of holding that level, the better your odds are of a push out move. And most certainly when it broke to a day's high, you could either take it, okay, or wait for the breakout and take that, right? But those are stocks that you like, okay? Big movers, leave the retail people afraid to enter. But now, okay, you've got up into the top of this resistance. It stopped just short. Block orders sitting here on the 4 hours. You'll see a whole bunch up here. Okay, a whole bunch. Different people selling at different levels, but they're all block orders. Block orders, block order. There's some kind of an order here, order here. Everyone has their own order flow. Those wicks tell you that the block orders are there. So it kind of got in between all of those wicks. I don't know, we drew this a long time ago. See this? We drew this a long time ago, and it came up above and then it broke down below to start this. And then you have, I think, this the macro one we just drew, right? Or did we already have this? Yeah, we already had this. So we had 3 points. That's too high, number one. I don't know why I can't appear to draw a straight line. I'm going to start here. Give it to me. There, right there. Boom. Okay. So they even took away the third the third contact point, gapped it initially down below. So this is just like Tesla. When I said just 636.36 is the gospel on Tesla. When you break that, take the trade, right? Take the upside. Same with Meta, right? You now have 3 points of contact. You couldn't do it here. Okay, you could trade the block order. You could use other analysis. Hey, I've got a block order here. I'm going to go ahead and draw this line to here. I'll go ahead and punch it out, so at least I have something to look for if this comes back down. But you can't trade off of this. Just when this happened, you can't trade that. You're going to have to use other variables. Okay, there was a block order here. Okay, obvious block orders sitting here, block orders, big time buying right here. I would be using that. I'm in a demand zone, in other words. It's showing that it's still there because I've got multiple time frame holding that level. Where would then that probably wedged and gave as November 25th or so. And of course it did. It gave a wedge, but then they gapped it. Let's see, the 25th was here. I can't see it. Right here. So you had a rising wedge on that stock. No, actually you didn't have a rising wedge. You had lower high here on the body close. What was the close there? Yep, by about 20 cents, a lower close here, lower body here. So this is a triangle, okay, an ascending triangle. And breakout above here would have been your trade. They gapped it, okay? They gapped it, pulled back all the way. Would have just been a guess. Okay, but anyway, you saw the block order. In other words, you see the block order sitting here on the 4 hour. So you had this wedge down. It violated it, break of structure, back down into this block order, 4 hours. This is, I don't know how many hours, 3 days, 4 days. So tons of hours, right? Block order buying going on. Break above that, this would have been the better time to get in. Your decision would have been, do I stay in or not? Okay. So always, when you don't have third point of contact, you got to wait, or you got to use other factors. Okay. But now the best thing that could happen for everybody is for Meta to come down. Okay. Because now we have a third point of contact. Just like Tesla. So when Tesla gave us that third point of contact, go to the daily. I didn't draw it all the way out. That's on me. It comes all the way back into the base here where this gap happened. That's your third point of contact. Is the start of your uptrend. That's the gap. They gapped it, unfortunately, but that's your extension. So that's your 3 points of contact, okay, of the wedge. That's what you're looking for, is a wedge. So you've got your third point now sitting here, okay? The breakout level becomes your point of contact. I broke out, so I didn't draw this exactly right, but you get the idea, okay? It's a little lower, makes this a little higher, and it's 436.36, not 336. Touch point. That was that. That's this. That was this through here. So we had two areas form at the same time. I didn't even notice this one, to be honest with you. Should have been all over this one too. once it held that level, would have been a better look to buy here. Otherwise, you have to break that 436.30 or 433.36, 433.36. That's the number, 433.36. When you break that, you're getting push moves now, back above, okay? 433.36, third point of contact right here. That's the trade. But now we have this, just in case Tesla decides to come all the way back down, we've got something to look at. In terms of a trade right now, had higher lows into the close, but not traditional, kind of like that. Yeah, you got a block order sitting right here, block order here, major area here, a huge void above. Okay, just dreaded H's, not block order. Sideways is block order. Dreaded H is just selling, manipulation selling. Okay, how can I suck in buyers? Because I'm just trying to sell out. Okay, it's not a block order, it's just a sell order. That's the difference of spotting a block order like this and this versus just straight manipulation selling, where they're trying to get money out at the best price possible, but their intent is to be out of the stock. Okay, they just have a sell order and they're just running an algorithm. So when it goes sideways, block order, H's, sell orders. Okay, no block to it. Okay. So anyway, you're coming into this zone. It's almost like you've got this wedge here that yes, if it breaks out above this area right here, boom to boom, above this zone here, then it's probably going to run up, and you would look at this 455 as your max. I don't even think that's the max. You got a low candle close right here. It's right there somewhere. Okay. Now, based on observation, this is just, you can't take this for anything but an observation. The observation is when you see this move like this, that is them expelling the rest of their order. Okay. In other words, the futures were down or something, and yet they held it into an open up here. And I imagine on this day, go look at January 6th and see if the market was down. And yet they held this to open close to here in order for them just to dump the rest of their order, thinking if I don't, I'm not going to be able to sell it anymore in this zone. And they dump it, and then of course that starts, then there's no more manipulation trying to hold a range to get their sales in, and then it just drops. Okay, so that's my guess, is that this is not going to be a major area of concern, that if you break through this, you're going to get an easier move through that level. Okay. An imbalance, yes, I think that's a fair statement. Yes, I think we already answered that question. Okay, Google, we can get rid of this. This is going to be the last one for now. I think we just need to, I've got some stocks I'm looking at, but I'm still haven't run the volume analysis on them yet. Okay, so this came into the base here. I want to look at the 4 hour. See if we've got any. Okay, so we've got a block order sitting here. Okay, this is a block order right here. Bring it back up, and this is pretty traditional. This is my favorite ones, because this is a block order that they have their buy, and what they did is they bought them this day. They started low to get rid of the other retail, because they want retail having to chase, not have already bought. So this is the tricksy trade dynamic. Okay, this is a perfect example of a tricksy trade, and why? Because what they're doing is they've got their block order. Anyone else that's been buying is also in their block order, right? They've been tagging along. They open it and drop it down below to get rid. That's a traditional tricksy trade right here. Drop it down. So anyone that's been buying a block order with them in the retail sector, get rid of them. Try your best to get rid of them. Then they expunge the rest of their order flow up to right here. They just buy, and they buy hard. And it gets a big move candle on the opening. What day is this? January 21st. Watch that. January 20. Look at this. So they have the ability to go to here, probably somewhere, or maybe even to here is their buy. And so what they did is they opened it low. This is why I like red to green as well. But the best red to greens are the ones that have the block orders. So I think you're starting to see how I come with my top trades, right? You're starting to understand, which is, I'm fine. I want you to understand. Why do you pick the ones that you pick? Okay. This is the why, is because when Google has a block order sitting there, then I use the rest of your thought is, hey, if it's a tricksy trade, red to green open, those are your better ones, not just any red to green. Why is it going red to green? Okay. What is the structure telling me on that? Well, structurally, we know there's a block order there. We see the new low, right, below the block order. And then we see it racing back up green from the previous day close. Their imbalance buy ended right somewhere in here. They're only allowed to buy up into this range on this stock. So they get it going momentum wise. They're not going to have any manipulative resistance anymore. Okay. If they have another order that's just a regular order, again, you could question ethics, but they'll put that order in now to help their big client. Again, you could question the ethics of that, but if they get a market order, they have the first 45 minutes to fill that order. Okay. You got 45 minutes to fill orders legally that were given from an overnight. So that means that they can use that to manipulate at any time that they want to. You can go argue, bang your head against the wall, whatever. It won't change the facts. They can do however they want to do with that order flow in the first 45. And of course, they're going to do what benefits them most, even if it's a little bit less to that client or a little bit more to buy to that client. Okay. It's legal. So you can't change the law. Well, you could try to change the law, but it's legal. So what they did is they tricked it. They made their end of their buys, and you see the big volume. They just, I'm just expunging, getting rid of the rest of my buys. They're done. Okay. And then whether it's them or whether it's someone else took over, because there's no more resistance manipulation. Okay. But look how it came down. They brought it in, and then they came down and retest, because they're questioning, if I bought this, is this for real? Is it really going to go higher? Even they are questioning their own buy, the secondary level people, right? So now you got retail involved though. So it's easy to manipulate retail after the fact. So, but anyway, the trade for us is over, right? All we were trading is red to green. Give us the push trade. I'm selling 50% at least here. Most of you, 75%. That's a good trade. It's a good trade. It's $4 move. There's nothing wrong with that. You'll build your account trading that. Okay. But then, yeah, you would go, hey, it can't even make Model T. I think this thing's going higher, but it did eventually, right? So again, you have all your analysis going, boom, boom. It's right back where that person either had shares to buy and they finished their trade. Maybe they kept a few thousand for this. I don't know. Who knows? They're good at what they do. You ever sit next to one? I'm an idiot. Okay, they're amazing how they run. But anyway, it Model T. So new entries. Guess what? New entries Model T. If this you got a wedge down here on the 5 minute. Okay, whether it's the 1 minute or the 5 minute that you're watching, if it breaks that wedge, let's take the trade because my exit's right here. Let's take the trade. Let's go ahead and go for it. And then you got yourself another trade that again, you're out 50%, 75. If you had sold 50 to 75% here on this move up to this base of that level, somewhere in here, I would have pushed the button right here personally, right there. I would have hit the sell button on that right there. And then if you held the rest, you got a beautiful move that made you whatever. And then you would look to your left and say, what's there? What could I run into? Well, I've got a ton of structure sitting here. Okay. So I got to get down to runners. Okay. I would have gotten down to runners here personally. I wouldn't have waited for that, but runners at the base. Okay. And that's kind of what formed is the base of that. Okay. So right now, what about Google? Is it a trade? No, we don't have a wedge. All we have is kind of, oh man, it's a mess right now, isn't it? Kind of have this lowering wedge through here. Okay, but that's a 5 minute chart. The 30-minute chart. Yeah, so we do have a descending wedge. Okay, we have a block order here. So what is it going to tell us if we lose 326.55? Okay, that's our first indication that potentially there's no more block order there. Okay, that would be a problem, right? Because you have an imbalance down below that all the way back into here. So you got this imbalance right here. So below 326.55, again, this would be something that if the futures are way down and this opens at 326.55 or so, short the stock because you're just going to get out if it comes back above here. So risk $1.50, short the stock, and you could wake up or not wake up. You'd have to stay awake, unfortunately. You could make $5 a share in no time. By 3 a.m. it could be there. And when 3 a.m. hits, it would probably flash down further if the futures were holding negative or even extending the loss. Because then the retail that can't trade from 7 p.m. to 3 a.m., but can from 3 a.m. to the morning open, they're going to sell. And it's going to send this stock reeling. Okay. So let's just watch another case study for us to watch, depending on what the structure does. So that would be outside. This is outside of this down wedge, which is horribly drawn. That's your wedge right there. So this is below that wedge. Okay. Not trying to draw these perfectly. I'm trying to show how structure works. Is this block order still there? It could extend down. And if you see it coming back up through, then you've got a block order there. If futures are sitting still, and it drops down below and then comes back up above, you could probably scalp a trade. Because if futures have any movement up whatsoever, this is going to jump back up close to 327.93 again, because it's at the base of the wedge, not up here. If this had closed here, would have been looking here for any upside, right? But now, because it's the base of the wedge, you can look to here. I think you're looking at like 329.38 really quick. If the futures were to hit a bottom, start a push move, they would have been buying. You've already seen that they're willing to push. So I would think you would at least get a scalp out of this trade. So I'm going to be on at 7 p.m. So we'll get a good look. And at 5 p.m. we'll know what the futures are doing. Okay. But obviously, you know, if you look at Model T on this stock from here to here, it's already done a lot of this. So now you would be looking, while that's an important number, okay, I'm not saying it's not, which is somewhere in the 330 range, but that's gone now. Okay, it's already achieved it. So now what you have is the Model T from here to here. And again, look where it's at. It's right here. Everything's math. Everything's math. Okay. It's 327.25. It's right here at this base, 327.25, which is why I like this 326.55 first indication of a down move. Okay. So there we go. All right. I'll start posting actual stocks now. I thought it was more important to understand the wheres and whys. And now what you can do is when I post a chart, you should then go backwards and analyze it based on what I just gave you and see what I saw based on, it's not just that it's a wedge, it's that it's a wedge with some type of a secondary, okay, trigger mechanism that we're looking for. If it has one, that's fantastic. If it's a block order, great. If it's a previous line of resistance being broken, great. Okay. Your job then is to take those charts that I give you and see which ones that you think have the very best setup of all of that. And then if I mention a single stock or two, here's my top two, and it's the same one that you picked, you should trade that stock. Okay. You should trade that one. That's how then you control your own destiny on trading, right? All you had was some help, but you're making that decision based on what you now see. And then if you hear feedback that that's the one that I like, or these two I like. Meta, hey, Meta, red to green Friday. That to me, right? That to me looks good. Microsoft, that looks good. It looks strong. It's holding up there in the pre-market. It looks good for continuation if it hits a new high. It did. Boom. It makes a move. Okay. So imbalance range, a late trade with Mr. Hey, doesn't mean it's going higher, but you do have an imbalance zone on this stock. And if you're going to do anything super cheap, what better time that is showing the entry into that imbalance? Why don't we go ahead and do something for 12 cents, whatever it was, 12 cents. It got down to 7. So you buy at 12 cents, you sell half at 24 to get your money back. And then it ended up going over $1, but I sold at 80 cents. But it went over, those went over $1 from 22 cents. That was just an imbalance move. Trade over, it ended up coming all the way back down. So that's why imbalance moves are so fun, is because when you get them and there's a reason to get them and you have a lotto opportunity to get it, do it, right? Just take advantage of that. Anyway, all right. I'll be posting charts. But anyone that you want me to do a chart on, either post the chart or just put it into the discussion, and I'll do a chart on it.